The insurance industry means well, but it gives bad advice to young producers. And in this video, I'm going to debunk three of the most popular myths on how to sell insurance that did not help me grow my $1 million revenue book of business. And then I'm going to go into what actually will help you sell insurance. So let's get into it. The first piece of bad advice that gets repeated a lot is don't sell on price. And here's why that advice sticks around, because some buyers who care only about price will absolutely wear you out. They shop every year, chase the cheapest premium, burn out your service team, and bounce the moment someone is $5 cheaper. So, yes, there is a grain of truth there, but here's the bigger truth. Everyone cares about price. Even your best buyers want to know they're getting a good deal. And here's the kicker: most people don't know how to articulate what's wrong with their insurance program, but they do know how much they're paying. That's why one of the first things they'll say to you is, I think I pay too much. Now, here's where most producers make a mistake. They hear that and immediately label the buyer a price shopper. But what matters is what they say after that. I think I pay too much because. That word because is where the real problem lives. Maybe they think they pay too much because their broker doesn't understand their business. Their renewal was last minute. They haven't seen marketing results. Whatever the reason, it's your cue to lean in, not back off. One of the most valuable things you can do as a broker is help someone feel like they're getting a better deal, not just in terms of price, but in terms of process, clarity, and service. And if you can't do that, honestly, they don't need you. Great brokers know how to create leverage with underwriters and know how to market accounts. They know how to structure deals that actually feel like a win to the client. So, no, don't run from the price conversation. Understand the real reason they feel like they pay too much. If it turns out they truly are just price shoppers every year and don't care about anything else, pass. But if their frustration is rooted in poor service, lack of transparency, or confusion, that's a problem you can solve. The second piece of advice you'll hear a lot is sell on value, not price. You'll usually hear this from marketing reps, underwriters, and industry trainers. And again, they mean well. But here's the part you need to understand: they're not training you to win with clients, they're training you to sell their product. Insurance companies don't want to compete on price. They want you, the broker, to see them as the superior option so that you push their product to your clients. That's why they're always highlighting endorsements, special forms, coverage extensions, sewer backup limits, debris removal, cyber throw ins, whatever it is. But here's the problem: most buyers don't know or care about that. They don't understand the fine print. They've never had a claim that went sideways. They have no reference point for what any of this actually means. Until something breaks, value is theoretical. So when you lead with better coverage, you're selling something the client can't feel. What actually matters is perceived value, and that's defined by them, not the underwriter. So, yes, sell on value, but make sure it's the kind of value your customer recognizes. Clear communication, simpler processes, better experience, and trust in you. You can't just say this is a better policy and expect people to buy in. They need to feel it. The third piece of bad advice: sell value added services. The first time I heard this, I was reading The Wedge by Randy Schwantz, an amazing book, and it taught me a ton about how to separate from the competition. But back then, I had no clue what a value added service even was. I was just quoting and praying, hoping something would stick. Schwantz helped me realize why I was losing. I wasn't creating separation. But what the book didn't explain was how to create a value added service that a client would actually care about and I could realistically deliver. And here's the rub: just like with coverage, most clients don't care about value added services. Access to attorneys, HR professionals, loss control, risk managers. It sounds great on paper, but most clients won't use it. They don't call the hotline, they don't attend the training, they don't even log into the portal. So what happens? It becomes more theory. Just another bullet point on a proposal that no one's excited about. And if you're a small or mid-sized broker trying to compete against a regional or national firm and you go toe to toe on the spreadsheet of services, you're going to lose. And not just once, but routinely. If you want to win, you need to bring something meaningful, not just a flyer from your carrier or a service list your competitor also has. You've got to show up with something real, something felt, and something that your larger competitor can't do the same way. Because if you're going to try to play the game the same way they've defined it, you're going to get your clock cleaned. Instead, write your own rules and make them play your game. I've spent a lot of time talking about what doesn't work, so let's talk about what does. Buyers don't switch brokers because of clever slogans. They switch because they're in pain. Here are the real reasons I've heard directly from buyers when they're getting ready to make a change. They say their broker is non responsive, or they say their renewals come last minute, or they say they have no clue what they're actually buying. They say they feel misunderstood, or they say they're not being shown real options in the marketplace. And almost every single time, the conversation starts the same way. I think I pay too much because. That phrase is a signal. It means I don't have confidence in the solution I'm getting. Maybe they say, I think I pay too much because my broker doesn't call me back. Or I think I pay too much because I don't think my broker understands my business. It always starts with price, but the root is trust and clarity. And this is where value added services can matter if you position them right. If your GPS tracking units are going to help your underwriter drop the auto rates, that's real. If your documented screening program is going to help a nonprofit qualify for abuse and molestation coverage, that's real. Value added services work when they're tied directly to saving money, getting access, or solving a problem that matters to the buyer. That's how you make value real, not just on a proposal, but in a way the client actually feels. So if you've ever felt like you're being told to do things that don't help you close business, you're not alone. Look, price matters, value is subjective, and services aren't magic. Hey, look, if this video was helpful, please hit like and subscribe. It helps other people like you find the content. Let me know in the comments what advice you got that didn't help you. I'd love to hear about it. I read all the comments and I answer everything. Thank you so much for watching. And as always, please go build something great.